You're watching Risk SA TV. I'm Hannah Barry, and this morning at the International Insurance Conference Southern Africa 2013, we had a panel discussion on the short-term insurance industry and its business practices, as well as the future of distribution for the short-term insurance industry. One of the speakers for both of those sessions was Willem Roos, who's the CEO of Outsurance. Willem, you mentioned in your discussion that you think the market share for direct insurers will reach between 65 and 70% in the future. Are you confident that Outsurance is going to hold on to its market share when there are a plethora of direct insurers entering the market?
Yes, the insurance industry and the direct market particularly has become very competitive with lots of new entrants, both from traditional players as well as completely new players entering the market. Outsurance has about 20% market share. Whether or not we can increase that market share remains to be seen. My colleagues will differ from me. I think they think we can do a little bit better. I think probably we'll do well to maintain our market share at that level, just because you're seeing so much new competition, and at some other point in time, that does have an effect. The only way is if one of the newer players and so on falls over, and I can't see that necessarily happening. So it's going to be very tough for us to significantly grow market share from where we are now.
Just on that, do you think that direct insurers can actually compete in the call center space when it comes to giving advice, and is it purely a price competition, or is there competition to be had in giving advice through call centers?
The reality is that in car insurance, I think it is mostly about price. But having said that, I think it is crucial for a high-quality direct insurer to ensure that we do give proper advice. Car insurance is complex, the product is complex. However, most consumers probably need similar things, and I do think with good systems and with good procedures, you can have very good advice giving in your call centers, provided it's supported by those systems, like I've said. And absolutely it can be a differentiator. Good advice is just a different term for giving great customer service. And both at the time of buying the policy and claiming, so on, we need to inform the client what's best for him or her. And if we don't do that, we'll struggle to compete.
Can call centers give advice on commercial insurance products? And if not, what is the future of direct commercial insurance?
I think call center driven commercial insurance is aimed at the small commercial entities and maybe a few medium-sized businesses here and there. And I don't foresee that will become a significant proportion of the market. I do think if you want to become a significant commercial insurance player, you either need to deal through independent intermediaries or even your agents. These days most brokers place most of their business with one insurer. So to what extent you're independent, whether you're really just a part of a quasi-agency force. So, but I do think that distribution of commercial insurance will primarily be through brokers and agents. You have to give face-to-face advice, and you have to give good risk management advice on site for the majority of commercial ventures.
So from the man himself, face-to-face advice is important in some insurance markets. Now, last question. Outsurance ran an ad last year where it was a price comparison, and it said the average price, let me get this right, of a business insurance policy from Outsurance was cheaper than its 4 closest rivals. After investigation, it was found, though, that the average of the 3 closest rivals was actually lower than Outsurance, and one of those rivals, the 4th rival, when added, sort of skewed the average in favor of Outsurance. We all know what happened. One of the intermediated insurers rose a complaint with the Zaire, and Outsurance was taken to task. My question is simply, did you not feel like you were misleading the consumer with that advert?
Yeah, look, it was certainly not our intention to mislead, and I think the fundamental, we can get very technical on exactly what happened there. We were happy that we could prove that we were on average cheaper than the average premium of our 4 other competitors. But we didn't get an independent company to go and do proper surveys. So we didn't produce independent research to underline that claim. And I think that was the fundamental issue where the SAIA Code of Conduct Disciplinary Committee found against us. And we accept that decision. We shouldn't have done it. We'll take it on the chin. I think we'll be very careful before we do any comparative advertising again in future. So I agree with you. I don't think the intention was that it was misleading, but we could have done better on that score. And it underlines the fact, you need to get, if you're shopping around for insurance, whether you are an individual or a small business, it pays to get more than one option, get more than one opinion, get more than one quote, and make sure that you choose the one that works the best for you.